Hey, and welcome to another episode of the Growth Visory. As always, I am your host, Jim Crimella, and this morning I am so excited to have with me a fantastic guest, Thomas Woodward of Infiniti Mortgage Solutions. Welcome, Thomas. Thank you so much for joining the Growth Visory today.
Awesome, man. I'm so glad to be here with you. Appreciate it.
Absolutely. And I always don't like, I always start these things off saying, I don't do my guests nearly as much justice as they deserve from knowing their backgrounds and their expertise and things like that. So why don't you go ahead and tell the audience who you are, what you do, and what's great about being Thomas?
Well, what do? I sell money is what I tell people when they ask me
Fantastic.
out on the street, what do you do for a living? But it's actually much more complicated or simple, I guess, depending on your point of view. I've been in the financial services industry for over 20 years. So for those of you who are familiar with the past here in the financial services industry, that's before the 2008 and the passing of Dodd-Frank under President Obama. So I was before the Great Fall and after the Great Fall.
You're a survivor.
I'm a survivor. I stayed in it. So I've been in it for a very long time. I've worked with small retail lenders, large lenders. In simplistic terms, I'm a mortgage banker. What I do is I help consumers obtaining to purchase real estate, whether on the commercial or the residential side. Most of my work is on the residential side. My personal practice, what probably makes me a little different than, or I should say a lot different than your average loan originator out there is, generally speaking, in this industry, the vast majority of providers of loan services are out there competing for, the person with 800 credit score and they've got W-2 income of $200,000 a year and they've got 20% to put down. And so you have the vast majority of wholesale mortgage lenders are going after that market. You have 25 banks trying to do that loan. And I decided many years ago I didn't want to be 26. So I decided to focus on a delta. The difference between, there are a lot of good people out there who can afford a house. They're consistent on the rent. They're doing the right things, but there's a knowledge lack or a practical side of the process to buying a house that they're missing, and they just don't know the right people or have the right connection and so forth. So I really focus on that market. First-time home buyers, I speak Spanish. I have a huge influence in the Latin market. Actually, most of my clients are from that community. A lot of first-time home buyers, that type of thing. And I really wanted to focus on that market of people who, they're great people. They're doing the right thing. They can afford a house. They see the benefit of the house, as opposed to that, the medical doctor who's got 25 banks that are fighting for that deal. So that's kind of like
you're only competing on interest rate, really, right?
Yeah. So then it's just a pricing thing, and it's a totally different animal. And then so what happened was, I worked with the largest lenders in the country, and about 5 years ago, I really saw the need to start my own company. So I own Infiniti Mortgage Solutions. I'm the president and CEO of it, and basically the reason for that was, going back to the previous thing about 225 banks wanting to do one loan. That's true of product availability as well. So the goal was to be a complete service to whoever walks through the door. So whether you're coming in and you're a nurse working in a local hospital making $100,000 a year, or whether you're a self-employed carpenter that has your own John Doe Carpentry LLC, I wanted to be a one-stop shop to help whoever comes to the door buy a house. And to do that, I had to have access to the complete product suites. And most lenders do not do it. And there's a reason why. I don't know if we want to get into that or why. There's a reason why someone can walk out of a Bank of America, for instance, and I love Bank of America. No, I got nothing but love for them, but they on purpose do not have a complete set of mortgage products because they service the client they want to service. And if you don't fit into that box, then they just don't want the loan. And I understand that. I respect it. There's nothing inherently wrong about that approach. But for what my vision was, I had to bring together a bunch. I had to have access to the product line so that I could service anybody that comes to the door. And that did two things. One, I wanted to be that one-stop shop for the client. Secondly, for realtors, when they're they got their sign out there and people are calling them and so forth. They don't, the realtors, they know they have a house with 5 bedrooms and the door's red and the bathroom's blue, blah, 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 blah. They don't know the person's calling can actually buy the house. You know what I mean? They're not lenders, they try, I think they try to be sometimes, and they shouldn't, but they're not. And so the other thing is, I felt like if I could be that one-stop shop for that realtor as well, that no matter who calls on their sign, I'll find a way to get your deal done. Right. The downside to that, as for me, and if we talked before, you have experience in the mortgage industry, then you know where I'm going to go with this.
Yep.
The downside is, I'm not going to make always the right money on every file that way. So I actually have, in a given year, I do several files pro bono, where we're not making anything. But the idea is to get it done. I believe in client acquisition. I may not make money on this particular file, but the next one I will, and they'll refer me to the. So I believe in client acquisition and service. But that was the real vision behind Infiniti. So Infiniti, the word means unlimited. The idea was to have unlimited products, and that's kind of what's what the core means behind the name Infiniti Mortgage Solutions. Unlimited mortgage solutions would have been another way to name the company, but that's kind of where.
So I'm going to dork out a little bit on my mortgage background, just because I'm now genuinely curious, because I've been out of the mortgage business now for 17 years. I was not a survivor. I lasted until 2008, and then I got into marketing, and things, took off for me on that end of things. When you're saying that you've got, more non-traditional lending programs that fit the greater swath of person, like you generally seem like you want to help all people, not just people that fit that tiny little box of conventional lending, that kind of thing, where it's a Fannie Freddie type of deal. What type of programs are there out there nowadays? Because I'm sure our audience would love to know.
That's a great question.
I'm a pretty big expert in the field, and I just don't know, hey, what kind of programs are out there that may be non-traditional that I could qualify for?
Gotcha. That's a great question. Okay, so let's take a quick snapshot from when you were in the business prior to 2008. In 2008, if government loans were they were garbage. Nobody did FHA back in that day. I mean, it was just, everything was private money. And we had stated income, stated assets, and there was a complete division of lending called non-prime that really was borrowers that had terrible credit, terrible history, and we were doing 100%.
Yeah.
I mean, it is what it is.
That had there were loan programs, for those watching. There were loan programs literally that had, you didn't have to put an income statement down, you didn't have to state your job history, you didn't have to state any assets. It was, did you have a pulse? So, did you kind of have a social security number? Because there were even deals you could get like a 70-80% loan just on a green card, not even needing to be an American citizen to get a loan. Yeah.
Well, that's okay. I'm heavily involved in that market, and we'll get into that. And actually, whether you have, as long as you have an employment authorization or a permanent resident card, green card, you can get the same thing as any natural born citizen. But let's take it. So 2008 happened, the big fall at the end of the Bush administration, and Obama Dodd-Frank took place. So a lot of changes took place. So the biggest thing is that the government loans now took full front, because all the private guys got out of the business, not to talk mortgagees, but the real estate investment trusts, the REITs were no longer being purchased in New York on the stock exchange. It was a big problem. I can tell you stories from that time period that will blow your mind. But anyway, I'll tell you a quick one real quick.
Go for it.
America broke a so we used to do this thing called the neg-am loan, right?
Yeah.
I'm sure you're familiar with it. You could borrow a house and your payment would be 1%. But
the option.
As you made a payment, the interest that you weren't paying went on the back of the loan. It's called negative amortization loan. The second, it was either the largest or the second largest producer of those loans was a company called ABC, American Broker Conduit. In the 2008 time period, there was even a website. It might be even still out there, imploding banks. So when you do a refinance, okay, on a primary residence, I don't know if your borrowers know this unless they've done it, you close and then it funds 3 days later. America Broke Conduit, we had, I don't know how many deals with them. I was running a telemarketing people out of India, and they were calling, and it was a whole thing, man. It was a whole thing. I'm calling ABC on Monday, right? I'm like, hey, we're closing day on this one. I've got a few more deals coming to you tomorrow, blah, blah, blah. People go to the table, they sign the paperwork, and they're supposed to fund it 3 days. I call on a Wednesday about new deals, and the phones are disconnected. So if you can imagine, and this is the crazy time period that 2008 was, people went to closing, they signed the paperwork, and the money never showed up from the lender.
Yep, I also had that happen.
Yeah, that's why we're wet states now. If you want to know why Virginia, which is where I'm located, I'm not sure where you're at, but why Virginia is a wet state is because of people sign paperwork. You think your mortgage is paid. I don't have to make my payment because I just closed on my refinance, and you take off to Florida, and the payment on the loan that was supposed to get paid off never happens.
Right.
It was
That's
crazy, man. It was absolutely out of mind. So when Dodd-Frank came and cleaned up, so the whole industry changed, and there are three great divisions in lending today. The first one is the government-backed loans. So these are loans that are sold to Ginnie Mae. These are your FHA, Federal Housing Administration loans. These are your USDA and your VA loans. All three of them are sold to Ginnie Mae. They follow, so when you go to someone like me, and I work with over 30 lenders. There are wholesale lenders that don't have brick and mortars. They only work with guys like me. United Wholesale Mortgage, the largest lender in the country. I do a lot of business with them. You can't just walk into a UWM. You've got to go through a broker to talk to them. So these loans, FHA, USDA, VA, they're funded by the private lender, and then once they go to closing, they're sold to Ginnie Mae. The second great division is conventional loans. You're talking Fannie Mae, Freddie Mac, and you can also have some REITs that are purchased on New York. But generally speaking, conventional loans we're talking Fannie, Freddie. There is a third division of Dodd-Frank, okay? And so that's that FHA, and in those three categories, we're talking about the combination. It's almost, I tell my clients, it's like you're going to a kitchen to bake a cake, because no matter what you're doing, it's a certain combination of credit, income, and assets. Okay. You have bad credit. This is this program. Income is this program. So normally, if you have bad credit, as long as you have strong assets and strong income, I can overcome it. I can get you done with a 500 credit score if you have assets and income. Then you have people who have no money. They need down payment assistance. So they have zero money and they have to buy a house, no money down. Well, that's okay if you have good credit and you have good income. Or you have people with no income, but they have good credit. So we can normally overcome one of the three depending on the program. But your govies are going to be sold to Ginnie Mae. Conventional is a little bit harder credit-wise. You'd be a little bit better credit-wise. And the reason for that is when you go into the second department of conventional loans, the mortgage insurance, if you put less than 20% down, the mortgage insurance is private. It's like getting State Farm for your car, but State Farm for your mortgage. And those private firms, okay, if your credit's not good, they just tear you up over the mortgage insurance. That's the difference with FHA. On FHA, you're going to pay the same mortgage insurance whether you got a 500 credit score or you got an 800 credit score. The MI is the same across the board. But on the conventional, it's not. And that's why your conventional is a little tougher for people who don't have really, my cutoff is like 680. If you're putting, the 5 or 3% down conventional and you're under a 680, you're going to have a tough time with the conventional loan. But you're asking about number 3. So I'm rambling on about 1 and 2, but that's third department is called non-qualified mortgage. Now, when Dodd-Frank passed, all of the parts of the law did not go into action at once. There were certain parts that went in, and, there was RASPA and TRID was a blah, blah, blah. One division was a part called non-qualified mortgage. Okay. And what it says basically is there are some criteria that a loan meets that makes it a qualified mortgage. FHA is qualified mortgage. Your conventional Fannie and Freddie are qualified mortgages. They are traditionally looked at. If you are W-2, we're looking at pay stubs and W-2s, verifications of employment from your employer. If you are self-employed, we are looking at your tax returns. If you've got a corporation, we're looking at your 1120. Corporation S, we're looking at 1120S's, blah, blah, blah. It's straight up vanilla, okay? Non-QM breaks out. Okay, if you have a loan that is a non-qualified mortgage loan, the lender does not have the same protections as a qualified mortgage loan. There is additional risk involved. However, that division of lending is blowing up right now, and I'm gonna go over a whole list. The most popular one is what's called the DSCR, which actually I don't do a lot of those. I just happen to work a lot with people that want to buy a house, you know what I mean, to live in. But DSCRs are very popular right now. We do them, and they're easy to do. But DSCR is, let's say you're purchasing a property that you want to rent a house. I'll give you a great area that you can, if you want to deal with it, is Baltimore, Maryland. You can buy a property very inexpensive in Baltimore, Maryland, and rent it out. For example, you put 20% down. I've actually got some whole lenders on the investment, they'll go down to 15. You can actually get as low as 15%. But then what we do is we use the rental of the property alone to qualify for the mortgage. So this is a great product if you're an investor, because most investors, as you may know, Jim, are just, they're they're leveraged. And
Yeah.
so there's so much money everywhere. So we can say, all right, we're not going to look at your taxes. We're not going to look at your bank statements. We're not going to look at all we're going to do is we're going to take the mortgage payment of the property and compare it to the rent. And if they're at least, and there's a ratio there, some will be like, we don't care if the rent's $2,000 and the mortgage is $3,000. But generally speaking, I'm going to generalize this. I want your listeners to understand this is a generalization, and there are lenders that basically, if the rent is equal with the mortgage payment, you're done. They put the 20% down, and it doesn't matter so you're totally bypassing the problems with qualifying income. DSCR is a great product. Here's another one. And I do a lot of these. So when it comes to non-QM, most of what I do falls under the next two spots. So you have the income issues. So if you have someone that's not full doc, okay, there are two other ways to qualify income. We could do what's called bank statements. So you're self-employed. So you have a contractor. They're doing business bank statements, and they've got $500,000. This is very, very common, by the way, these numbers, because you got to remember that contractor, he's buying material at Home Depot and Lowe's and wherever else. He's paying his employees. It is very common for that contractor to have $500,000 going through his account. Okay. Yeah, sure. So what we're able to do is now I have his tax returns, and he made $30,000 of qualifying income last year.
Correct.
But he's got $500,000, even $1 million going through that account. Right. So I can't show that tax return to the bank. They're going to say the guy makes $30,000. He can't afford anything. But what I can do is I can show 12 months of those bank statements, and I can say, let's say he's making $600,000 a year, $600,000 in gross money going through that account. That's $50,000 a month. I could take half of that money right off the bat and give that to him as income.
Wow.
So now I'm at $25,000. So now I got a guy that's got $30,000 on his 1040s. That's $2,500 a month. Yeah. He can barely afford to buy a doghouse in Northern Virginia, right? Now he's got $25,000 of income I can use on the non-QM program side, and now he can have I can get that guy $12,000 a month. He's not going to do that, right? That's a $1.5 million. He's not buying it, but he'll be happy because he can buy his $500,000 house, which is what he needs in this area. Right. $600,000 house, if that's what he wants to do. So I can use that $12,000 income. I'm showing the bank statements. I have an accountant that writes a letter saying the guy's in good standing in the state, blah, blah, blah. And it's a great product. Is the interest rate the same as conventional FHA? It is not. It's going to be on average a point to a point and a half higher than what he would get if he did that. But here's the trade-off. And I actually sit down with my clients that have this situation, and we have this conversation. And I said, look, you got a choice. Okay. You can either report the money on taxes and your tax bills. I'm going to tell you the tax bill between $30,000 and $120,000. There's a difference. Okay. There's a big difference between $30,000 and $120,000. Or you can do this bank statement. The drawback is your interest rate's going to be a little higher, but normally it's not. That's not a big deal. The biggest problem is it is a bigger down payment. Yeah. On Division 1 on FHA, you're talking 3.5% down payment. VA and USDA are 0% down Govy programs. On the conventional side, if you're a first-time home buyer, you got 3% down with their first-time home buyer programs, or 5% down minimum down payment on conventional loan. On the bank statement loan, 10% is the smallest down payment. So your buyer is going to have a bigger down payment. The reason for that is because of the non-QM division of the Dodd-Frank law. The lender is protecting themselves because they do not have the protections of a qualified mortgage situation. Basically, if a buyer defaults a non-QM loan, they can actually go back and get 2 years of their mortgage payments returned on top of, they'll lose the house, but they can actually get their mortgage payments returned for 2 years. 24 months of so I've never heard of anybody actually doing it. I mean, this is a big country. We got a lot of people. There's a lot of non-QM loans. I'm sure somewhere in the United States of America, somebody has tried that. I'm just not aware of it. What I can tell you is that non-QM is exploding, and that's one example of where we see that. So bank statement loan. I also have profit and loss. So let's say I've got an all cash person, and I close a few of these every quarter. Okay, so I got a house cleaner. She's cleaning the house. She's getting paid cash. Some all cash work. Okay. Yep. Whatever it is. Okay. I'm a consultant. I'm getting paid all cash. The accountant just writes, instead of just giving me the account letter that says, hey, this person is self-employed, they also provide what's called a profit and loss, which is for 12 months. It's a document that says how much money came in, how much money came out, and what is their net income. I can actually use that profit and loss, no tax returns, no pay stubs, no W-2s, nothing. No bank statements, nothing, and use that profit and loss for the only source of income for that file and close on that file. It's a great product. We use it. I'm using it right now to refinance a client in Manassas, Virginia. It's a great product. Once again, non-QM. It's going to be a point to a point and a half higher than your regular interest rates.
Right.
But it's a great product.
Is it any additional higher than the bank statement program, or is it roughly the same?
As far as down payment?
Yeah.
Or is the interest
just in general, like interest rate, down payment?
Interest rate, okay. So for your watchers, for your viewers, mortgage rates are actually done. Pricing is done in what's called BIPs. So everybody's familiar with the term. A point is 1% of a mortgage. BIPs are hundredths of a percent. So to answer your question, the BIPs on a profit and loss will generally be marginally higher. So, but what happens is it's almost like a family. Like
right.
So conventional loans are all going to be around 6. I'm going to just pull some random numbers. I haven't checked today's rates, but let's say conventional Fannie and Freddie are going to be right around 6.5. Your FHA and Govies are going to be half point low, around 6. Your non-QMs are going to be 7.5 to 8. Okay.
Sure. Ballpark. This is the ballpark, guys.
Right.
Ballpark.
So once you get to that area, let's say you're with the non-QM 7.5 to 8, bank statements are going to be lower in that parameter because the lender feels a lot more comfortable seeing money go through somebody's account than profit and loss. So the profit and loss program is marginally higher, but it's very close. You're talking about an eighth.
Okay. Small amounts.
Yeah, it's not a big difference between the loan product. So, and then another one, and you touched on that, and this is really, I do a lot of this type of business, is I work heavily with the Hispanic market. Yo hablo español. Yo soy casada con una catracha. I'm married to a Hondureña girl. I did a radio program for a couple of years. I was the Gringo Catracho in Washington, D.C. We did that for a couple of years. And so I'm going to touch on this. The other big area of non-QM is not for the great, so your green card holder. So there's the different levels of immigration paperwork when it comes to financing is you have what's called employment authorization. That means somebody either comes here legally or illegally. They've applied asylum as employment authorization. There's also temporary protective status. Let's say there's some problem in El Salvador or Honduras or somewhere, and there's an earthquake. There's something wrong, and people flee here for help. The United States gives what's called temporary protective status. They'll give them a card that's called employment authorization. It gives them permission to work in the United States. That is the first level of legal immigration status. It is not a visa. They cannot leave the country, but with that card, they can work legally in the United States. And the FHA allows them to buy a house. If you have basically the HUD has said, if you can legally work in the United States, you can legally own a house. Doesn't matter whether you're citizen, permanent resident or not. If you're legally working here, you can legally have a place to lay your head. So, and so they can get an FHA mortgage. They can get a Fannie and Freddie mortgage. Now, a couple exclusions to that. USDA does cut a lot of those employment authorizations out. Bank of America, Wells Fargo, a lot of these guys will not do a mortgage for someone with just employment authorization. I do them all the time. And they get their cards renewed. It's called employment authorization, but they're legally here. They have status. They have a social security number. It's employment authorization. They're not going to be permanently here unless they get a change of status. The next level is permanent resident, which means now they're a green card holder. And so they're permanent resident now. And the next level is then they become citizens. Sorry for the education and immigration, but I wanted to touch on this non-QM part that's critical because it's growing by leaps and bounds. And that is what's called the I-10 non-QM loan. Now, I'm not going to get political with, I don't want to get political with anybody here. I'm just explaining things as they are. In the United States of America, if someone comes here illegally, so I mean, literally, they come over the border from Mexico, they swim over the Rio Grande, and they come here and they are completely undocumented. It's very important to understand this. There's no visa. There's nothing. They didn't come through the entry port. The United States does not know they're here. They are illegal, undocumented. And they come here and they start knocking on doors. Hey, can I cut your lawn for $100, whatever. So they begin working here and they're staying here and they meet people, blah, blah, blah. What happens is these people that make money, they decide that, they want to hang around or they want to access certain things. So our federal government has a process by which these people can pay taxes. I think it's really funny. To be honest with you, I laugh about it, but it's not. I mean, it's. I laugh because it's like So they apply for an I-10 number, this is one of the things I use to try to help, because I'm heavily involved in this big community. I tell them, relax, calm down. You know what I mean? Because the United States, they issue these I-10 numbers. So you understand that you got to embrace this mentally. What's happening? That means they're having someone who says, "Hey, I'm here illegally. I have no documents, and I'm working illegally, making money. I want to file taxes from my illegal presence and my illegal money making." And the United States government says, "Sure, here's your number." So, and you can tell I lean towards, I love the community, and I want as many hardworking people that love this country here. And I'm just in their corner. If you're here to work and all that, and I'm not trying to engage anybody on politics, but I just find it funny. And Americans don't know that the United States does this. Okay. They just don't. Your average gringo does not know that the United States government is doing this. People are putting their address, their name, they're sending their copies of their passports from Guatemala, El Salvador to get these numbers. And the United States is, send us that tax money. Give us that. That's just, oh my God. I don't even have the words going in. But anyway, I gave you that whole history. So if someone has an I-10 number, well, guess what? They get credit cards, they can get, so they're you understand, no visa, nothing. They're undocumented, getting credit cards, bank statements, and welcome to the party. They can buy a house, right? So you might be shocked at that, but they could buy a house. I do several loans for I-10 buyers. These are, and so I have lenders that have to put down, I have one lender that will go as little as 10% on a full doc loan. So if they want to show their tax returns and everything, 15% on bank statement or profit and loss. So if they don't have the money on bank statements, because most of these I-10 people are filing taxes. And I want to put a caveat in on this. A lot of times they're doing it because they want to get papers here. And they know that it's very important to pay their taxes to show that they're contributing part of society. It's just, and so what they do is they pay, and it's a sad thing because a lot of them have been here for many, many years and just, they pay the highest rates in taxes and just with the dream of one day being able to change their status. So, but they can buy a house. So they have to put down a larger down payment, but they own the house and so forth. And those are I-10 loans. So that's also a part of the non-QM. You'd ask me what makes up that division. Yeah. And they're a great community, great buyers. And I'm hopeful that, I'm really hopeful that whole situation just get for the people whose hearts are to make the best that they can, and be the best that they can. I hope everything works out for them in the long run. Yeah.
Well, Thomas, thank you so much for the education and the background on catching me up from the last 10 plus years of the mortgage industry. And I didn't even realize the non-QM stuff was even a thing anymore. Like, I knew it was very popular back then. I would get a lot of borrowers that, when I owned my mortgage company forever ago, that could not qualify conventional. Their credit was too poor, or like you said, they were self-employed, they owned a business, but didn't have that full doc status. So I relied heavily on bank statements, or what was more popular back then was just stated income. So it's interesting to see that there is a version of that still exists. So thank you so much for that education.
And the state income has come back as well.
Gotcha.
So there's a lender out in California now that they've been emailing me, but they have no income, 20% down. They have those now. So the profit and loss is probably the more common thing that's kind of stepped into that place of stated income.
Okay.
But the same goal. But the big change between pre-2008, 2009, and now is these programs are requiring a larger down payment.
Gotcha. Makes sense. It makes it a safer investment for banks and stuff like that. Keep the institutions of financial lending safe, I guess. Okay, so let's pivot the conversation a little bit because I love your passion. Like it is clearly evident that you are passionate about what you do. I absolutely love that and who you serve. That means you're absolutely a success in my book. But I want to pivot now to the actual business itself. Like, what are you currently doing to grow your business in 2025? So, what's like your big picture strategy look like?
Well, so that's a great question. And the last 3 years have not been good on the lending industry.
Right.
I realize that there's a lot of, if you listen to a lot of people in the industry, people out there that talk, what's the word? The motivators, you'll hear a lot of, you can make it your own and it doesn't matter. You hear that type of, getting the mindset, that Grant Cardone 10X. And that's very good advice. I embrace that. The reality is though, that it's a different market when rates are 6.5% than 3%, and they're down from where they were 7.5%. So it's been really tough. And I think, as far as 2025 is concerned, and I do like every business owner does. Okay. I at the end of 2024, even monthly, every day, really, on some level, I'm thinking, what can I do different? What can I change to be better? Because not only is my industry been under interest rate risk attack, that's a whole division of pressure, but part two is the world is absolutely changing right now. And AI is revolutionizing lending on a level that I'm sure if you're not in the industry, you don't realize how much AI is affecting our business. So we now have AI that looks at documents to calculate income before a human being ever gets involved. And so, dealing with that. And the other part is just social media. Like I think I've got a lot of, trying to navigate, understand this world of social media. So I'm a Generation Xer. And so I was really quick to go into computers and the internet and all of that. But the world has changed such now that it's not the same type of, there's these algorithms and everything that have just, and there's so much social media. There's Facebook, Instagram, Snapchat, TikTok, Telegram. It's just, it's like a full-time job. And so, to answer your question, I'm trying to do more. I've got some ideas, like we're planning on doing more live things. I'm also revisiting some of the traditional forms of phoning. We're looking at AI phonings on data. We're looking at a lot of different things to try to grow, because what's happened is somebody's buying a house in this industry. I'm looking at ways to meet that person, because I believe that what we offer is second to none. Yeah. As far as speed is concerned, if I do get that vanilla file, I can close that in 10 to 14 days.
And that's purchase versus refi, or is that?
If it's a regular file purchase, I close very, very fast. If it's FHA, or conventional VA or that, we close very, very fast. The non-QM stuff is going to be 25 days. So our timelines are really good. Our pricing is excellent. We have connections to keep the closing costs low. We're a great package. We're very competitive in every respect, and trying to find ways to meet that person, because a lot of people who are listening to this social media stuff that's out there, they're hearing the negativity in regards to buying in this market. And the reality is there are a lot more reasons to buy a house than the existing interest rate. And when you're renting a property, you're losing 100% of what you pay every single month. And one of the things I try to help people understand is this is not about like buying a car. You're not buying a Mercedes Benz. You're not buying, a boat. What you're doing.
You're not buying a depreciating asset.
Correct. You are repositioning an existing outflow of cash. So you're going to pay and this is really where I disagree with Grant Cardone on this point, and I disagree with Dave Ramsey on this point. I disagree with them because both of them, they are looking at a sliver of the population. You can't apply Dave Ramsey's beliefs to the Washington, D.C. area, where the average townhome is over $600,000. You just can't. It's not going to happen. And Grant Cardone, so of course I'm referring to, for those of you who aren't familiar, Dave Ramsey believes in buying houses, but with cash, not using any debt. If you're in the outskirts of Tennessee and you're paying $50,000 for your first house, I totally conceive that being not a bad thing to do. Right. But you're not going to do that in Northern Virginia, okay? It's just not going to happen. And the average rent in Northern Virginia is $3,000 a month. So you're going to be putting out $36,000 a month in rent. I'm just saying, let's take that $36,000, reposition it that you're already paying out. I'm not telling you, hey, go buy a Mercedes-Benz and get a new debt. I'm saying you're already forking out this. You're paying for where you sleep. Right. Reposition that money as opposed to paying rent. That's my core argument. And historically, I'm right. Historically, the evidence shows over and over and over and over again that the number one way by which people find or discover financial freedom is through owning where they sleep. For Grant Cardone, who I'm a big fan of Grant Cardone, I've read his books. I'm a fan. I think he's right. Where I heavily disagree with him is Grant Cardone teaches do not rent your primary
residence.
Yeah, and he's absolutely wrong on that. It's the only thing that he teaches that I would disagree with. I can go through the math, and with him, I would on that any time. It does not make sense. If I'm going to be forking out $3,000, I am always better forking out $3,000 for something I own as opposed to something I don't own. And the math testifies to that over and over again. He is right that you're much better off putting money in an investment property as opposed to leaving it in the stock market. I agree with that. I mean, it's a lot of stuff the guy says. I agree. If you can endure the risk factor, you know what I mean? So there's a risk that comes with all those, So if you can endure that or put up with that risk level, and so I agree with him in almost anything he says, except for that point. I believe that owning your primary residence, there's a lot of reasons to own your primary residence. One, you can do whatever you want. Paint the walls wherever you want. Your kids can claim their own room. Number two, the landlord's not going to raise your rent every year. Number three, the tax benefits are tremendous. Number four, you have the equity growth within the property. It just goes on and on and on. It's not a flip. You don't flip your primary. You know what I mean? If you're going to buy a primary, I'm going to buy it and sell it next year. No, that's not the right mentality. If you're buying the house for the long term, 5 years, you are almost always going to come out on top because it is a long-term investment. So that's where I think the differential is. So finding that person, I'm going to go all the way back to the original question. What am I doing in 2025? So finding that person that sees that, wants that, feels that's sick of writing that rent check. Yeah, gosh, I got clients that are paying $3,400 in rent in Northern Virginia. Getting in front of them is a challenge. It's just not like it was. I'm looking at doing some live things. You're doing a podcast here. I've got some relationship with some restaurants. We're talking about doing some lives at restaurants, like doing a regular thing. I'm working on some social media posts. I got some things running right now. I've read books on it, but I'm lost in the sauce, man, when it comes to.
It's a lot. The world of marketing is a whole different world. Like, you have all this expert knowledge in the mortgage industry, right? Like, it's clearly evident. I have yet to speak to someone who has more knowledge about the inner workings of the mortgage industry or how to get a borrower qualified and closed and happy for the benefit of the borrower than with you.
I appreciate that.
Marketing is a completely different industry world with 1,000 different variations on what you can do and how to leverage your time. So I guess, what are you currently doing to fill that pipeline full of borrowers?
Well, we have, to be honest with you, the majority of my people are repeat customers right now. So
referrals.
Customers. And I am desperate to break out of that. It's great. Don't get me wrong. I'm very glad that we have a good book of business. I've been in business for a long time. I got several thousand people in my database. That's viable. But the downside to that is expanding to new markets. So, for instance, I'm licensed in the state of Florida right now. So we're in Maryland, Florida, and Virginia. What's that?
Yeah, I live in Florida.
Oh, okay. Yeah, so there you go. So in Florida, I don't have 3,000 people I've done loans for in the past 15 years. So that's a problem when 90% of what I'm doing is coming from existing business. So that's really what I want to deal with that. And my real goal is I want to get a third of in a perfect world, a third of my business would come from marketing. Okay. A third of my business would come from referrals, and a third would come from professionals who refer business my way. So I have I have an MLO at Bank of America that sends me deals about once a month. He'll send me a file, because there's just stuff that doesn't fit their wheelhouse. But he wants, but he wants to keep the client happy because they might get a car loan with them, open a checking account with them, do a home making line of credit with them, which, there's all these products that you can get at Bank of America. I don't do credit cards. I don't open checking accounts. Right. I do one thing and one thing only. I do the mortgage. So, so in a perfect world, out of 12 files, 4 would come from professional referrals, 4 would come from online marketing, and 4 would come from referrals. And I'm okay with the online marketing even increasing that because I'm really I want to increase my footprint. And for that reason, so it's great to have the experience. It's great to have the past. It's great, and I love my customers. I love the people I work with. And I'm so glad that they keep coming back. But I am focused on trying to get out of that and educating myself. I spend a lot of time studying marketing and reading stuff. Trying to do courses, and I bought a lot of equipment for making videos, and so just trying to do it. But whenever, I'm definitely all ears when it comes.
Yeah. What does your team currently look like? Are you one-man shop? Do you have support staff underneath? Do you have processors? What does your team actually look like right now?
That's a great question. So 3 years ago, we were like 8. So now I'm down to 3. And what has happened is processing now has changed to where a lot of the wholesale lenders I work with provide processing services. That need has really switched around. A couple of LOs left the industry. I had one pass away. That was very sad.
I'm sorry for your loss on that.
Yeah, he was a good guy. So and then some people left the industry, but now we're down to about 3 people. And
3 LOs?
No, one support person and one. I'm the broker, but I'm also a active loan officer.
Understood.
If you look me up, 364-341, you'll see me right in the. Anybody can put my NMLS anywhere in the world, and the NMLS, which was also created by Dodd-Frank. We've talked about Dodd-Frank a few times. You can look me up right there. So I'm there. Jericho Cherry is also an LO in my company, and then I have an operation person that helps us as well.
Okay. Very cool. Very cool. Okay. So if you could have a magic wand that you could just wave to solve one thing in your business, what would that be?
A magic wand to solve one problem in my business. Yeah, probably the thing that I think about or occupies my thinking most is the marketing aspect. I'm really that, and I think that's probably going to be consistent with most small business owners like me who have something they've discovered that they're good at, but the problem is finding people
to serve. Yep. I'm right there with you. Like I said before we hopped on the podcast, when we were chatting earlier, I was really good at the mortgage side. I knew every lender known to mankind. I knew every lending program. I knew how to if you had a pulse, I could get you a loan that was fair. Right. And I refused to do option arms because I felt like I was just setting the borrower up to fail. First time homebuyers had no business ever doing an option arm, in my opinion, because they had no clue what they were getting into. They just saw the cheaper payment. I want the cheaper payment. Anyways, I digress. I didn't know how to market. So when 08 came and I was like, I don't know, I got no business. I got borrowers that are going to the table ready to buy their first time home and they can't even get the loan. Like the money is just not showing up. I'm at the title company. We're ready to sign. And where's the wire? Call the bank. We don't have any money. What? That is not a good feeling to have. So that's why I focused on the marketing side of it, because I realized that if you understand marketing and you understand what you said, you have this group, there are thousands of people every day in this country buying a home. They all had to get loans from somewhere because not all of them had money to purchase a home. Right?
Exactly.
How do you get my fair share of that? Now I'm gonna be slightly braggadocious for like 12 seconds, so bear with me on this. I work with a company right now that's it's the 3rd or 4th largest lead generator for mortgage leads in the country. Last month in February, I created 23,071 mortgage leads. So just out of that swath of thing, it's like that was my chunk of it. There are plenty of people that are looking for mortgages in today's day and age. Now, those leads are, those are your bread and butters. The people that buy those leads are Bank of America's, Chase's, Rocket Mortgages, that kind of stuff. So it's high volume. It's kind of expensive per lead, but it's not. It really just depends, right? And I'm not saying that everyone should go that's wanting to grow a mortgage business or financial service business should spend money on ads. If you have a consistent marketing budget, there's no higher leveraged opportunity that you can do than running qualified ads to get qualified or pre-qualified borrowers so that you can have great conversations with only interested people, especially breaking into new markets. The downside and the negative slight that paid ads gives is if you try to do it yourself, you have no idea what you're doing. And if you think trying to figure out social media is complicated, trying to figure out how to make an ad platform, and understand that most ad platforms want to make it simple for you, and by doing so actually sets you up mostly for failure versus success. And then you get frustrated, or you hire someone that promises the world and then they can't deliver because they don't really have a track record for it, but they fit your budget, so you follow with them. You don't get the results that you want. And it's painful when you don't get results off of paid ads because you still have to pay for the traffic. So there's lots of ways to skin this cat. For you, there would be a couple of ideas. And if you're okay, I'll share them with you on the cast. If not, we can hop off and then I can share them with you off. It's up to you.
Whatever. I'm open either way, my friend.
All right. For you, you say you want a third on marketing, a third on referrals, and a third on corporate partnerships, or like those types of relationships with banks that, I've got these loans. I like the people. I can't qualify them. They don't fit my little box. How can I work with them? Really quickly, from an organic standpoint for marketing, if you are comfortable being on camera, it sounds like you have the camera equipment already. It sounds like you're kind of gearing up for that. I would focus on action over perfection. So doing a poorly edited video, getting a lot of volume out is much more important than getting small volume out of content and the making sure it's the highest quality video you've ever seen. Doing short form videos on Instagram, YouTube Shorts, TikTok is going to be the fastest way to grow your online presence. And you can really just syndicate the thing. You could sit there and walk down the street. And every time you're walking down the street, or I'm getting in the car, out of the car, I'm walking in the house, whatever, and I have a tidbit that I want 30 minutes that we discussed about the different loan programs, the things you can do, that all, you're going to have a whole bunch of short form content I'm going to be able to send you from this call that you'll be able to immediately apply. And you just keep hammering that content and giving people advice. That's what people want. They want advice. They don't want to be sold. And then by giving people that advice, they are trusting you. They are learning to trust who you are. And you posting that out there and saying, hey, if you ever want to have a conversation, check the link in my bio. That's it. It's a soft close. There's nothing hard. There's nothing really to sell there, but you're putting that content out. So keys to winning in social organic is volume of content and consistency of posting. Most people would say post twice a day. If you can get twice a day, you'll be fine. I say don't. I say do as much as humanly possible. I would much rather I have a thought as I'm running, I have a spare 5 minutes in the day, shoot a 30-second video and post it and just see how often you can post. If you're posting 10, 20, 30, there was a guy, he would post roughly 100 times a day and he blew up to 1 million followers in 3 months just on Instagram because he realized that the algorithms don't punish you for the frequency of posting. You're just, think of it as, Kobe Bryant. Kobe Bryant wasn't just one of the greatest basketball players ever because he was naturally talented. He outworked everyone. He just took so many more shots in practice. And so he was so ready for the games. And he made practice more competitive than the games. That way, when they got to the games, it was easier, right? So the games were like a reward for all the hard work. So the more shots you take, the more chances you have of a video going viral or semi-viral or whatever, and that will give you those extra context. So in marketing, I always say you have two main levers to pull to get new business. One is either if you have money, you can save time. Because if you have money, you can invest in the marketing necessary and you can leverage your time tenfold, hundredfold. No, that's not a joke. If you don't have the money, you have to invest the time. So that's social organics, things like that, where if you can invest hours and hours per day of just spitting this stuff off, posting it to TikTok, posting it to Instagram, posting to YouTube Shorts, it'd be the same raw video, right? I shoot one video on my phone, I open up TikTok, I edit it real quick, add some captions, post. Do the same thing with Instagram, do the same thing with YouTube Shorts. That's a lot of time, but you're not spending any money for it. And it would be shocking to see just how successful that'll be. But that's where consistency really does come into play. because with that organic strategy, you're not going to get those results immediately overnight. Like this podcast, Growth Visory is new. This will be our 3rd episode that we're posting up, and over time, it'll grow and it'll snowball. So the more of these I do, the more we're going to grow. So I'm not worried about the fact that my first podcast ever got 20 views so far. That's normal. That's going to happen. There are people that have 40,000 subscribers that get 200 views on a video. That's going to happen. But it's just about being consistent and taking those shots. So to like boil down social media in 2025 for you, it's that. Short form is king. You're going to have much better chance of growing an audience and getting that following you're looking for by doing it. For you specifically, I would blend my content between Spanish speaking content and English speaking content. So I do half my videos in Spanish, half my videos in English, because it's going to hit different segments.
Well, I currently have 2 different. So I have an English Facebook page and I have a Spanish Facebook page. So I put content on there right now that every day. I just haven't done it recently.
How many people do you know hang out on Facebook?
I mean, a lot, but I'm also saying that's actually a great question. I have a lot that are on Snapchat, a lot that are on Instagram. Yep. Instagram is very popular. I sometimes even think Instagram is even more popular than Facebook. And then there's TikTok. I got a number of people saying, Thomas, go on TikTok, go on TikTok. Yes. So part of and you touched on it, but if I may glean from your mind.
Sure, go ahead.
This is my problem. If I go here and I do a recording, okay, and one of the biggest questions I have is, with that recording, now what do I do with it? You're suggesting that I take the same recording and put it in everywhere. And I've been fighting doing that. That's I can do that relatively quick, but I've been thinking I need to have a separate recording for every.
So as long as you're posting, if you shoot in 9:16, so 9:16 is vertical format, right? Yep. Like the vertical format of the phone. If you shoot that, you can post that any which way you want on any of those channels. Okay. So most small business owners fail at marketing because they overthink it. They think it has to be right. It has to be perfect. No, it doesn't. It just has to be out there.
Okay. All right. So I'll take that for face value. You're saying okay. One video, go to TikTok with it, post the same video to Facebook, same video. I'm probably going to just focus on those 3: TikTok, Facebook, and Instagram. Do you think
I would do TikTok, Instagram, and YouTube?
Okay, so the YouTube thing, shouldn't that be like a whole half an hour long teaching as opposed to shorts?
Just do the shorts. You can add it on there.
They're not Facebook? You're saying not Facebook.
You can do if you do Instagram, you're pretty much covering Facebook anyway, because a lot of times it steals it. I mean, if you love Facebook, go for it. I just go where the people are, right? Like Facebook is great for paid ads. Facebook is king for paid ads. No joke. It's got the best algorithm ever created, devised by man for paid advertising.
Okay, here's where here's the problem I'm having. And I'm so glad to be talking with a pro on this. Okay. I get action on my, like I have an ad right now that's on Facebook, and I'm getting I'm getting 100 clicks, but the leads aren't coming through. Like they're not going and filling out an application. Yeah. What am I, is something in the conversion I'm doing wrong? And I have a realtor that I work with too. Hers was just her phone number. She was getting a lot of action. I don't know if they were clicking on her just because she's attractive, but then she didn't get any phone calls. On mine went to a loan origination software where they could begin the application, put the information. No one ever did, even though I was getting lots of action according to the metrics.
Yep. So funnel was set up incorrectly. I would never send it directly to an app, to like an LOS, because you have no real way to follow up with it unless they fill out the whole thing. I would create a lead intake form, or I would, it depends on what the messaging of the ad is. I would have to see the ad and really analyze it and go from there. But if I'm making a guess that your ad was trying to get people directly to fill out an app, then I would do it either on your website to make it very clearly evident to fill out the form on the website. I would ask general questions like, what do you want to do? Buy or refi? What type of property do you have or interested in? Attached house, unattached house? What's your name? What's your phone number? What's your email address? Why? And then that's it. Capture that and then go from there. Every time you ask someone to fill out a form or a form field or do a click, that adds friction to the process. So when you first are initially introduced to someone via an ad, unless your ad does a fantastic job of educating you and filling out who you are and all of this stuff, you only have so much attention span on that user. So every question you ask, every form fill box you ask them to fill out, you have more drop off. And it's time and time again, like we can track a form field. It's a survey or a form fill, and it's step by step. And every more field you have, you will lose a certain number of people. So if you're asking to do an entire app, it's not surprising.
Well, there's
either that or the tracking just wasn't set up correctly.
Well, they went to the app. I mean, the first page is, fill out your email, name, password, blah, blah, blah. And no one completed that first step. Yeah. But I don't know. So so if you have a suggestion for that, that would be amazing. That would be great.
Yeah. So if you have a CRM, that would be the easiest way to do it, just because then you're in full control over it. Alternatively, well, you can do a direct form fill on Facebook. So Facebook's ad would be like click and then it auto fills it. You would want to have qualifying questions ahead of it, because there are bots that go in and click and they fill it out and then you never get a hold of them. So like to improve quality of the lead, you would want to have some qualifying questions, meaning like, do you want to refinance or purchase? What's your home? How much do you want? That's general questions. How many bedrooms, how many bathrooms, if it's a purchase, that kind of thing.
So you suggest a funnel type of a click, and the click on it goes to a funnel.
Yes, 100%. Because you need to educate and gain trust with a person within about 8 seconds on your ad to entice them to read more, to learn about you, to gain trust, to then get that information. So like education-based marketing for your aspect is going to be a huge win for you, but having a robust funnel that we can track each individual step with to see where the drop-off is and then optimize each step of that funnel would be the best use of your money.
So, okay. And then what about you're suggesting 2 postings a day?
No, I'm suggesting like 10 to 20
postings a day.
Thomas, you breathe this stuff.
I'm not.
Okay, bear with me. Hey, y'all. So I was just on the phone with the borrower. I just got him approved. He's going to get a first-time home buyer, and I had to use P&L. So if you don't know what a P&L is, go ahead and click the link in my bio. I've got a video for you on there about it. Have a great day. Catch you later. How long did that take? Hey, y'all. So I was thinking the other day about, I was talking with a friend of mine who just got this loan, and they feel like, interest rates are just too high, so they want to wait. Here's why that's a bad idea. It's a bad idea because you're just pissing money away if you're renting all the time. You should just buy a home and transfer that money so you're building net worth. You want to find out how to do that? Click the link in my bio. Have a great day. There's 2. How long was that? 3 minutes?
And then you take that and you put it up to TikTok and you upload it to that. And
yeah.
There's probably some kind of AI that does that now.
Yes. Yeah. I mean, you can build out a whole robust thing where if you were to upload those videos directly to a Google Drive, and then you could set it up to where Google Drive would edit the video and then post it, all 3 of them, you would lose. I would not recommend that in the beginning, only because you do get an extra tiny bit of exposure in the algorithm if you do it in their native platform. Meaning if you open up TikTok and you add the video through TikTok's video editor and you add music behind it or captions behind it, that kind of thing. So you'll get a little bit more initial exposure on the algorithm. Once you have more history with it, then yes, you can automate all of that. You could do 1 raw video and then send it out. But yes, I'm suggesting that most small business owners try to find enough time in a day to post twice. When I am not a mortgage person, but I just riffed off 2 video ideas that are 30 seconds to a minute long, that are valuable content, challenge the stated norm. And if you want more info, click the link in my bio. And the click the link to your bio could just literally be part of the landing page that you have saying, hey, have any questions about mortgages? Book a 15-minute call with me. And it's a book a call count, like a Calendly thing or something like that, where you book 15 minutes, it syncs up to your calendar. So it's only an available slot. You give it when you want it. Like, let's say you only want to take calls during these 2 hours of a day, right? I'm going to block up these 2 hours of a day to accept 15-minute conversations from leads. And I'm having conversations with people. Now you're having lots of conversations. The more hits you take, and by hits you take, I'm talking about the more times you step up to the plate and you swing your bat with social media content, the more likely you are to hit a ball.
So when should I do like educational content, like that 5-minute long teaching on something, or should I not?
You have time. It's when you have time, because all of these platforms like longer form videos and short form videos, short time videos as a mix. So block, I would say if what I have found to be the best use of my time is if I don't schedule it, it doesn't happen. So if you want to block off, let's say an hour a week, I'm going to block off an hour from 10 o'clock in the morning to 11 o'clock in the morning every Friday. I'm going to sit down in front of my screen and I'm going to film an hour long or a half hour long worth of long form educational content. And from that long form educational content, I can break it down into a bunch of shorts or like 5-minute clips if I want, and then spread it out wherever I want to put it. And you could just say, hey, these are the things write a bullet list. I want to talk about NQMs today. And NQMs, I'm going to cover DSCR loans, bank statement loans, P&L loans, and employment auth, permanent resident loans. So those are the 5 topics I'm talking about on my long form video. Here's my long form YouTube video. It now creates, if I'm talking for an hour, realistically, this podcast, I'd be able to pull out 20 shorts. So that's 2 days worth of content. And you can leverage, if you're filming it just from your home, then, or wherever from your office, then you can either use Riverside, which is what we're recording on right now, or you could use Opus Clip. So you put long form video up there and then they just spit out, say, hey, I want short form clips. And they have AI in them that'll just say, these are the best. We think these are the best clips. And then you run through, and some I agree with and some I don't, but I'm able to produce anywhere between 8 and 20 short form clips off of our podcast in probably 20 minutes.
So when you record here, does this, because what I'm looking at is not 9:16, it's 16:9. So
nope, it's 2 left. We're side by side right now, right? So when I say go 9:16, it'll stick me on top and you on the bottom just because I'm host and you're guest. So it'll just move us on top, and then we're all of a sudden in perfect 9:16 format. And then it has a setting in there that will do panning. So when you and I are both in an equal conversation, it'll show both of us. And then when I go on a monologue, it'll just focus on me. And when you go on a monologue, it'll focus on you. All done for you.
Oh, okay.
I love this program.
So you don't use OSB ever?
Don't use what?
OSB?
No. So OSB is great. I mean, it's great for like live streaming. And if I'm going to live stream on multiple platforms, I would use OSB or a program like that. I was recommended to this program, Riverside FM, and I'm a huge fan. Just because this is my form of what I'm doing for organic content. My initial push is this interview style, podcast style conversation. So, because I would rather talk to someone. So like, if I'm giving advice to you, I can now turn this into a short form video. So now I'm giving advice, one to many. And that's Russell Brunson uses it now, but it was originally taught to me by the person who taught it to Russell Brunson. So he's Dave Van Hoos is his name. And he was the original person that taught me the power of one to many. So by getting in front of what you want to do, one voice, getting in front of as many people as possible to help as many homeowners as possible, right? So that's the benefit of marketing. That's really what marketing leverages, is it puts your singular message into the voices of many. Now, the last point I'll give you, or last idea I'll give you on advertising, paid ads, would be going good old-fashioned Google search. Because I'd say out of the 23,000 leads I produced last month for mortgage, I'd say at least half of those were just good old-fashioned Google search. And you're talking about the most high intent leads you can possibly come up with, because that person, you're not interrupting them. They literally want your stuff because they searched for it. I want this. So a proper structured campaign with ad groups specifically around your non-QM stuff, I think would do incredibly well. Even purchases in general, because most mortgage ads, most ad spend is spent either on HELOCs or on refinance.
Once again, I'm having a mistake. So I have Google My Business. You know what I mean? Yep. I do the least amount there because I really struggle with the capture part of it. Like, you know what I mean? What they see once they click on that.
Yep.
That's and that tends to be more expensive too, right? Because you're bidding for, unless there's different ways to do it.
Well, this would be, I'm referring, like you're talking local service ads, that kind of stuff where it's like Google Guarantee. Like Google My Business is great because it's It's how people find you on a map, so it helps your local business area. And then you could say, hey, I service this area in local service ads. I'm not a huge fan of it. We're beta testing it with a personal injury attorney out in California, and it's really spotty on the quality of leads. I'm having much greater success with, I mean, you're talking old fashioned from an internet advertising standpoint, old fashioned Google search ads. But you are absolutely right. If you don't have the right funnels set up, if you don't have the right CRM set up to follow up with those people, then it's, it can cause its own issues. So if you're going to market online, you have to have the right system in place to capture the leads and then to follow up with the leads, whether it's an automated follow-up or not. Like, for example, when you booked with me to join this podcast, now we just booked a couple of days ago, right? So, but you got automated messages saying, hey, your thing's a day away. Hey, your thing's an hour away. Hey, your thing's 10 minutes away or 15 minutes away, whatever it is. That was an automation. I didn't sit there and manually sent you an email saying, hey, don't forget. But same type of thing that you can do if you get a form fill that you own that data. Now it's on your CRM and you can build an automation where it's, hey, haven't been able to get a hold of you, so I just want to give you some information based off of what your form information you did fill out. I noticed that you're interested in purchasing. Here's some great advice for you on purchasing. And you just start giving them value, and you give them value every day or every other day. And then they learn to trust you. And then you convert a lot more than just that. Well, I didn't get an app on that first day because they clicked my ad on the first day, right? And then follow up sloughs off because we're super busy. And manual follow up is really hard unless you've got hours or a support person that's all they do is manual follow-up.
What are you currently?
Bless you.
What CRMs are you recommending for the mortgage industry?
So I use a catch-all. My favorite CRM right now is a software called Go High Level. It's High Level.
I was just waiting. I knew it was coming.
I like it just because of the cost of it and the flexibility of it. Like you can, with the sub account or whatever your main account of it, you can really tailor it to any business. And since I work with all kinds of financial service industries, if they don't already have a CRM set up, and some of them do, some of them use HubSpot or Salesforce or what have you, and we can integrate with it. But for the money that you can spend with the flexibility that it has, I like it the best. Now, what I wish they would fix and improve, and I'm sure they will over time, is I like their surveys for lead forms more so than just a form fill. I just don't like their formatting very much. So if anything, if I was going after high volume or something like that, I would probably blend Typeform because I like their formatting better, and then just embed the Typeform inside of a high level page. That way it's the lead, and then you would have to send the lead from Typeform to high level, and you can do that via Make or Zapier or what have you. Make's probably cheaper than Zapier to get the information into, like you say, I'm having a hard time getting that contact's information into my database so I can follow up. But that's the whole point of it, right? And then you can leverage the automation sequences that you can develop into high level to do that automatic follow up. Like I can annoy people for 365 days or at longer. It's like I'm going to eventually have a conversation to close and help you, or you're going to tell me to go pound salt, never talk to me again.
Good job. Awesome.
So those are some high level ideas that I would have that you can implement. Obviously, the cheapest one is going to, from a monetary standpoint, is also the highest expense from a time standpoint, and that's that organic content stuff. But you could even drive people onto a newsletter, like a free newsletter. But then if you host a newsletter on the right spots, you can monetize that newsletter via ads. So like you can have ads embedded so you could earn income off of the ads inside the newsletter while you're just giving content and valuable information to the people on the newsletter. So it's a way for you to keep up with your current 3,000 people in your database. And then as you grow your database through your organic channels, you can say, hey, if you want more information like this, I drop a daily or a weekly or a bi-weekly newsletter full of the latest mortgage ideas for your thing. Join here. It's absolutely free. And then you're making, unless you get it up to tens of thousands or 100,000 people, you're not going to make significant income off the ads, but you could open yourself up to affiliate options and then do affiliate offers in there. So like maybe you got people that for some reason their credit is so bad, or they got a recent bankruptcy and they need help with credit repair or something along that line, or they need to consolidate debt so they qualify. You could create a referral thing where it's like, if I refer you and something closes, I would like to get a percentage off it. Now, I don't know the legalities if that can or not, but other industries, it happens all the time.
Sure. Gotcha.
So All right. So from here, to wrap up the podcast, I want to ask one final question, and that is, what is the number one thing you're looking to accomplish for the rest of 2025? Like, if you're like, in 2026, when I'm reviewing 2025, if I look back and go, this happened, then I'll say 2025 was an absolute win. So what would that be for you?
I'd go back to the marketing piece, to have something that is working in place, meeting my metrics that I'm looking for. That is the main focus of 2025 right now. That is really where I'm at.
Nice.
I've got to figure out a way to cross that. And then this conversation has been helpful. I think, it's, hopefully at the very least I'll go in the right direction. Yeah, there's a massive imperfect action is kind of where that seems to be a recurring theme. Something is better than nothing.
It's the key to success, man. It's the key to success. Understand that failure is going to happen every single day. And the more failures you have, the more chances you have to learn and to get better at it. And then you get those wins from there. So for you, more conversations you have with more borrowers, that's the key to success. So it's just a matter of which strategy or which combination of strategies do you want to deploy to have those number of conversations. Thomas, thank you so much for the conversation. It was very educational, very enlightening. You clearly know your stuff when it comes to mortgages. If one of our listeners out there that's watching this wants to get a hold of you, how can they get a hold of you to get a mortgage done for them?
Well, I appreciate you having me, man. I've had a lot of fun. Thank you very much.
You're welcome.
They can reach me at 703-468-0931, the office number. And you can also reach me at Thomas, THOMAS, at InfinityMortgage.com. That's INFINITIMORTGAGE.com. And you can text or call those numbers, and I'll be happy to connect with you.
Awesome. Well, thank you guys so much for watching another episode of the Growth Visory. Hopefully this was enlightening for you as it was for me, and I'll catch you on the next episode. Thanks so much, guys.
Thank you. Bye-bye.